All right, everyone. Welcome back to the channel. Big CPI day, huge, crazy market reaction to that CPI news. We're going to talk all about it today. First things first, I would please ask you to drop a like, hit the sub button for these daily updates. I do them every day, try to do them every day most of the time. Do them for free, do them for fun. If you guys enjoy, hit a like, hit the comment, please, and let me know what you think. But first things first, we are going to jump into this CPI read. So, obviously, if you looked at the market today, you'll see everything shot up. Tech was up almost 2.5%. S&P 500 about 1.5%. Crazy price action to the upside today. All because of this nice here CPI report. Not all because of that. Mainly because of what the Fed is going to do, which we haven't heard from the Fed, which is a key piece of this puzzle. We haven't heard what they said, what they're going to. We haven't heard anything from them. They've only been talking about the bank failures. They haven't been talking about what they're going to do FOMC day. We haven't heard anything. So it's a big mystery. So market is ripping up while what the Fed will do is a mystery. Keep that in mind. So month over month headline 0.4% came in right at expectations. That's what analysts were expecting. Very important thing here is that, yes, we hit expectations, but you have to dig in. You got to deep dive. You can't just be like, oh, we hit expectations. How great. The key thing, core CPI came in elevated from last month. So that is the main one. That's the one that the Fed looks at. They don't look at headline. Headline came down basically because the energy index came down. Energy came down 0.6%. So the difference from headline and core, really the only difference and the only thing that pulled it down was energy. And the Fed doesn't care really about energy inflation. That is completely based on factors outside of their control. They're only looking at core CPI because core CPI is mainly shelter and services, which is very interesting. We're going to talk all about that. So market shot up today on the CPI report. All items 0.4%. Food 0.4% month over month. Food at home 0.3%. Food away from home 0.6%. That shit just never ends, man. Every month, what you pay at a restaurant goes up 0.5%. It's just craziness. So energy coming down. That's really the big factor. That's the only difference from the headline to the core was the fact that energy was pulled down. Keep that in mind. So core, aka they call it all items less food and energy, but this is basically the core CPI right here. Core elevated. We went from 0.4 to 0.5%. That's the highest that we've had since October. Why is that a big deal? Well, because the big push was shelter. We still have this crazy shelter inflation down here. 0.8% month over month. Services less energy services, 0.6% month over month. Just crazy. So we saw commodities was flat. Commodities has kind of been flat. No news there. But that is the big one, is shelter. Shelter is the most heavily weighted thing in the CPI data. It really is. So we have been seeing from December, January, and now February, we have seen 0.8, 0.7, 0.8. This has been slightly elevated, but basically last year we were still seeing 0.7, 0.7, 0.7, 0.6. So shelter costs are still going up. And now you can watch all the bulls on this. They're going to talk, well, shelter is the most lagging. That's what they all say. Shelter is the most lagging, which is true, but wouldn't you think we would see a drop? Now, December, January, February are typically seasonally the lowest when it comes to rent. That is when we should have seen rents start to come down. We have not. They've been higher than they were during the fall, during even the summer. 0.8, 0.7, and 0.8, that's a nightmare. Your rent's going up almost 1% every month. How fun is that? Haven't we killed inflation? Your rent's going up almost 1% every month. How nice is that? Isn't that nice? The Fed really took care of inflation. Or then they'll say, oh, well, yeah, the rents are still high, but those will start to come down when housing prices come down. Oh, when the hell is that going to happen? Is that even started to happen? Barely. It's a complete disconnect from reality the market is in right now. It's actually kind of insane. So we know that service inflation, I've said it many, many times, hasn't been moving. It just hasn't been moving. 0.5%, 0.5%, 0.6, 0.5, 0.6. You annualize those, that's well over their 2% goal. It just is crazy high. And these are where inflation just stays. This is, your food can go lower in price. Your gas that you get at the pump can go down in price. but is your rent going to stop going down? Are your services, if you want to call up a landscaper to get your lawn mowed, is the price of that ever going to stop going up? No, because guess what? Landscapers, haircut, all these industries, you want to get a haircut, you need a dentist, they're all just still looking for workers. There's still a huge gap in the supply and demand of labor in these fields, which is pushing the prices up. It's crazy. I'm very confused by the price action today, if you can't already tell. So let's look. Oh, another one I thought was interesting. Get to electricity. Yep, electricity still just sticky, still up 0.5%. Isn't that nice? Your electric bill's going up 0.5% every month. Do the math what that's going to be over the next 5 years, where your electric bill is going to be in the next 5 years, if it keeps going up at that pace. So just crazy. This is all, I mean, rent of primary residence, there you are, 0.8%. So they were saying this back in the fall. They were saying, yeah, typically this is where rents go down, is during the winter, for obvious reasons, because people aren't moving, they don't move. It's the summer usually where rents start to go up. That's when people are signing new leases. That's when their rents bump up. So we haven't even seen a move over the winter. Now, how lagging is this rent inflation? I mean, it just isn't moving. It just hasn't been moving. So when's it going to slow down? I don't know. They just say it should. Oh, when housing prices go down. That's right. Yeah, when housing prices go down. When the housing prices go down, that's when rent's going to go down. So your rent's never going to go down, basically, because housing prices just haven't even moved. So anyways, airline fares. Look at airline fares, up 6%. That's the highest since over here in, sheesh. No, that's year over year. No, that is month over month. Holy shit. Yeah, huge jump in, damn. Huge jump in airline fares. People are still flying. Another thing was shelter away. Hey, your booze has gone down a little bit. Oh, there we go. Lodging. That's the word I'm looking for. Lodging. Lodging away from home, including hotels and motels, up 2.6%. So you really have to look at this data to really logically tell, or like figure out for yourself why inflation is going up in some areas and why inflation is going down in others. The only reason inflation is going down in other areas is because energy costs have gone down. That's really it. That's it. So we're seeing hotel prices go up 2.6% over a month. We've seen airline fares go up 6%. So we still know consumers are still traveling and they're still going on vacations. They're still just spending money like crazy. But yeah, inflation, it'll just come down over time, right? You know, hotels aren't going to keep jacking up their prices, even though they keep selling rooms over and over and over. They're just not going to. They don't want more money. If you can't detect my sarcasm. It's crazy. It's just wild, man. It's wild. So, moral of the story, inflation really is sticky. And this is telling me, this is further pushing the notion that it is becoming entrenched. And now, if we look at our core, which, by the way, that's what the Fed looks at. They don't look at headline, they look at core. If we look at our core, we are seeing a rise in inflation over these past 3 months. It is still elevated. I mean, 0.5% month over month. That's still elevated. That's still 5.5% year over year. I mean, it's a crazy world we're in. It's a crazy world. I don't understand how the stock. I mean, I do understand it. I'm not surprised. We'll talk about the price action. It really doesn't surprise me. Honestly, it's so obvious because everyone's trying to short on CPI. But the fact that we are still seeing annualized, I mean, this 0.5% core annualized, that's 6%. We're still at 6% core CPI. Still at 6%. We're still up there. It's like, what these banks are talking about cutting rates. Goldman Sachs are out there saying, yeah, they're going to cut rates next meeting. What are these people? What? Why, if they cut rates, people just continue to spend. They're still continuing to spend, even with high rates. Okay, I gotta take a chill pill. It's all right. Whew, it's okay. It's okay. Anyways, let's look at the old market. So, as you can tell, we just went crazy today to the upside. S&P looking weaker than the Nasdaq, way weaker than the Nasdaq. Honestly, the S&P looks pretty cooked right now, and we know our resistance on the S&P is at 393. I've been telling you guys about 393 forever now. I mentioned it in almost every video, so you can see why that is a massive level here. Look at that. It was support over here. Now it's still resistance. So really, the price action on the S&P still looks fairly bearish, and I just cannot warn people enough to be very, very cautious to the upside. Incredibly, incredibly cautious to the upside. You could almost claim that the S&P is just doing a bit of a bear flag right now. Honestly, that's kind of what it looks like. So to me, the S&P, if we get above 393, it looks better to the upside, and that's right where our 200-day moving average is. We're still below that 200-day moving average on the S&P 500. So S&P 500 still looks good to the downside. I mean, despite these crazy price action days we've been having, we're still, I mean, we're back at where we were Thursday of last week. Like we're not breaking any new highs here. We are still where we were Thursday of last week. Just because we have these crazy volatile days to the upside does not change where we are on the chart. So you can just clearly, if you have two eyes in your head, you can very, very clearly see that we are still just going lower high, lower low, lower low. Maybe we're going to make a lower high on this daily chart. I mean, it's still pretty clear that the bias is to the downside, despite all this crazy news, despite the Nasdaq going crazy. Which now let's talk about the Nasdaq 100. All right, Nasdaq 100 here. So it does look better than the S&P 500. But same thing. We are still, look at this trend line. This trend line's so money. We ran up to our supply zone here intraday. So the volatility today was crazy. We rip up and then we get a massive pullback. I mean, we saw a solid 1.5% pullback at one point today. And then right at the close, we just shot out of a cannon, just crazy huge buy orders. So we're right up against this trend line and we're still just doing the same thing. Just lower high, low, lower high, lower low, lower high, lower low. So now we got a higher high, but still kind of a lower high on this chart. I mean, the meaningful pushes up, it's still a lower high. So it's still like really nothing has changed in my bias. I'm still biasing towards the downside. And I think we're just clearly in a crazy market environment. We are in an unprecedented market environment. Where we are just, this is a situation unlike any other. There really is no moment in history. You can't look back at history and go back, oh yeah, that was a time where we went from 0% interest rates straight to 5% over about 15 months. You literally can't do that over like 12 months. There is no precedent for that. And then on top of that, mix in a bank collapsing and then try to find a good example for that. So we're just in unprecedented times. This is 100% computers, algos, just jerking people around. I don't make a whole lot about this. I do admit if we start to break levels, if we look at our daily, it does look as if we do have a bit of a bull flag. And we're still holding that 200-day moving average. So we cannot just scream that this chart looks crazy bearish, but I also cannot look at the fundamental situation we are in and advise you to go long either. Not that I'm a financial advisor. I'm not a financial advisor. This is not financial advice. This is for education purposes only. But we break above this supply zone at 1235. We have a bit of a confluence right here. You can see this trend line. You can see this supply zone. We break above that to the upside, and we actually mount above 1246. Then the Nasdaq looks better, in my honest opinion. But right now, this is just kind of a pretty clear, we are bouncing off our 200-week moving average. We are bouncing off of our 200-day moving average. And so for the very moment, it looks bullish, but also it looks bearish to me. We did get a golden cross. The 50-day moved over the 200-day, golden cross on the Nasdaq. That's worth mentioning. But really, this tech rally is just out of control. I don't know how long it can go. And no one really does. We shall see. AMD going crazy today. Just ran straight up to the supply zone up here at 88.50. Above 89, AMD looks like it can just go straight up to 97. I'm going to sneeze. what was I talking about? AMD, NVIDIA. So goddamn NVIDIA. I mean, tech is just out of control right now. It's really ridiculous what tech is doing. Call me crazy. I might be grasping at straws. This kind of looks like a head and shoulder, head, shoulder. Supply at 244 to 244.50 to 241.50 has just been money. We have just ran up to it, bounced off of it, ran up to it, bounced off of it. Break above 245, I will officially stop trying to short NVIDIA, but until that happens, I just can't not short it. So you look at it and you can see this falling wedge. Everyone saw this falling wedge. You look it up on Stock Twits on Twitter. Everyone and their mother saw this massive falling wedge. We broke out of it, and you could see today we ran up to it and we retested that trend line. We bounced right off that trend line. So to me, naturally, when everyone sees something, I've noticed this a lot this past 15 months. When everyone sees a falling wedge and it breaks out, it is not uncommon that the exact opposite happens and we break out of it and we just go straight back up to the previous high. That is often why when you see a falling wedge, you short it right here. You go short right there, and then you set your stop loss slightly above the other high, because what they're going to do is they're going to rip it down, make you think, yeah, I'm smart for shorting it right there, aren't I? And then they're just going to go straight back up. And then they're going to look at the previous high and they're going to be like, hey, I bet a lot of shorts they got a stop loss right there, don't they? Well, what if we just push it up there just a little bit for a little while? And then it just goes straight down and the actual falling wedge falls through. So wouldn't be surprised if that happens on NVIDIA. But above 245, it makes like a meaningful move above 245. It mounts 245. Then it looks like it will just not come down. And that's unfortunately the way she goes, because this stock has been painful, man. NVIDIA has just been, I mean, look at this range. We've been in this range from 240 to 223 for how many trading days? That's a week. For almost 3 weeks now. NVIDIA has just been going sideways. Just maddening. Apple. I really don't have a lot to say about Apple. I still like it to the downside. It's in a pretty clear consolidation pattern, but we break this consolidation. It looks like it will push up to 157. I would imagine we'll run up to 157, hit the supply zone up here, and pull back. And if we can find support at 155 on Apple, then it looks great. If we run up to 157, it just rejects and goes straight down through 155. I think that's a good, very low risk short setup in my eyes. But Apple is still above that 200-day moving average. Keep that in mind. So that's kind of the theme here. A lot of stocks are still above these 200-day moving averages. Microsoft's just been going crazy recently on pretty high volume, too, must mention. But we just cannot ignore the reality. I know the market will do certain things at certain times that makes you question everything in your life, in your relationships. Not really, but it will just do crazy things like it did today. I mean, if I ran the market, I would be like, oh yeah, we just had a bank collapse because of high interest rates, and now we are talking about cutting rates because of inflation. We think inflation is going down, but then something just came out that told us, oh no, inflation is actually not going down at all. So yeah, it's probably going to get rough. Then if I was in control of the market, I would be like, yeah, it's probably go down based off of that. But naturally today it just does the exact opposite, because that's stocks. Most pain for most people involved. So have to keep all these things in mind. Be very, very cautious to the upside. I cannot say that enough. Even though I'm not your financial advisor, I must warn you, things are just, I got a real bad taste in my mouth. The stock market has gone up in times where, yes, it should not. Like COVID 2020, it did not. But what was going on? You look under the hood, you pop open the hood and you look under and you see, oh, wow, there's a lot of money under here. The Fed is just pumping so much money into this car, it can't stop going. That's not happening right now. Right now, you look under the hood and you go, ah, man, interest rates are still going up. Oh, geez, a bank just collapsed. Oh, wow, we don't even know where they're going to cut rates. Oh, God. Ugh. And earnings probably still going to come down, and unemployment's probably going to go up from here. Oh, ugh. Doesn't look good. I don't know. Don't look good to me. So if that dumb analogy resonates with you at all, I'd ask you to please consider hitting the subscribe button, hitting the like, dropping a comment if you enjoyed anything in this video, if you learned anything. I appreciate it very much. And I will see you guys tomorrow for the next one. Peace.